Hi, welcome to the video day, 31st of October. It is Monday. In today's video, we're going to take a look at the US dollar and give our updated outlook and forecast. Now, in terms of dollar pairs, we've got plenty to look at. We'll go over and take a look at them in just a moment. Now, in terms of the dollar, we have a major event this week, which is the Fed on Wednesday. Now, in terms of the dollar, there's a lot of forecasters saying the Fed could turn dovish and cause a trend change in the USD. Our view is the Fed should not turn dovish and the dollar should move to the upside. I'll explain my logic when we go through the trade setups. Also in this video, I'll go through some simple tips in terms of getting good risk-reward trade entries. Now, in terms of markets, we have got a lot of volatile moves at the moment. We've got a lot of choppy price actions. I'll just give my views on how to get really good risk-reward entries and not get stopped out too soon. Right, what we're going to do, go and take a look at the opportunities, but just before we do so, if you want to check out our trading techniques, learn our strategy, and also see our daily technical sentiment analysis of 14 FX pairs, just simply go to the link beneath this video and you can get live access to our member centre. Now, in terms of live access, that will end shortly, and we will go to an annual subscription, but you can lock it in for the next week or so, and also for a limited period get a discount on our membership fee. Just insert the coupon code beneath this video at checkout. Also, you can check out sample daily research from us on our blog, join our free mailing list, and also follow us on Facebook and join our Facebook group of traders if you wish. Right, let's go and take a look at the opportunities. Right, just quickly on the dollar index monthly chart, dollar measured against a basket of currencies, just to see the big picture. Now, you can see the dollar index work its way up in 2021. Then the accelerated trend line comes in 2022. A lot of people are saying, well, you know, dollar is overbought. Technically, if you look at it, yes, it is. But the big fundamentals are extremely bullish. We don't see much in the way of downside. I think this red candle we got this month will prove similar to this one here, where we reverse the upside. I'm looking for new daily highs, possibly longer term. We could run as high as 120. Now, in terms of the individual pairs, before we go and look at them, I just want to summarize why I think the Fed are going to be hawkish on Wednesday. It will take about 3.5 minutes if you just want to get the setup, so you can just skip forward. But in terms of this article here, I put it on the blog. You can go and take a look at it. It gives the reasons why the Fed are basically going to be hawkish in our view. And one of the main reasons is wage inflation. Okay, this is the employment cost index, and Jerome Powell, Fed chair, highlighted almost a year ago that it's a major indicator to look for in terms of the Fed, in terms of inflation coming down. Now you see it soared to the upside there. Okay, the ECI printed 1.2% quarter on quarter. Okay, that's the same as Q1, but less than the 1.3% expected. So it kind of eased back a bit year on year to 5%. A lot of people say, oh, it's ticked down, so the Fed can be a bit more relaxed about wages. No, they can't, because they've already said they want several months of meaningful drops in inflationary data, employment, and other inflation indicators for them to consider, being a little bit more cautious. So I don't think this makes any difference to the Fed. Wage growth, obviously so important in terms of when it goes up. Median PCE inflation, which is the blue line, follows it. That's the Fed's preferred measure of inflation. They need to kill wage inflation to bring overall inflation down, and this is what they're going to do. And this chart comes from Bank of America, and so does the quote. 2023 will be the year this monster tightening finally reaches the economy, kills profits, jobs, and the wage inflation that so far refused to die. The Fed don't care about the stock market. They don't care about slowing up the economy a bit either. They need to tame wage inflation. Okay. Now, Inflation remains broad-based, okay? Not just wage inflation, but this is good news for the Fed. Despite gloom around the future, incoming data has been surprising to the upside. That's economic data. So the economy has been fairly resilient in terms of Fed hiking rates. So that will encourage the Fed to continue hawkish. Now, this is how the market sees the Fed funds rate. Okay, on October the 28th, their expectations have gone down to below 4.25. Okay, they were not far from 450 just on the 20th of October. So when they see the unemployment cost index coming, they drop their expectations. This is charts from JP Morgan. JP Morgan is sticking with a higher rate. Okay, and so is the Fed dot spot, or so are the Fed dot plot of members indicating that rates will be just above 4.5%. So the market has actually turned a little bit too dovish in their expectations for the Fed. And this chart, I think, is really illuminating. It shows policy rate changes priced in to 2023 from 5 central banks. Look at the Fed. They're pricing hardly anything. They're pricing more for the ECB, Bank of England, RBA, and RBNZ. Now, think about it. The US economy is stronger than these 4 economies. So why would the Fed ease up in the fight against inflation? Okay, when other central banks with weaker economies won't. Makes no sense to me at all. So in terms of what I think will happen is the Fed will do 75 basis points, then they'll just have a hawkish message. They won't give any indications about what they're going to do in December and onwards. They'll just say it's data dependent. And I think that should be enough to underpin the Fed. I don't suddenly see them turning or giving some dovish message. Obviously, we'll have to wait and see. But that's the way we view the Fed. Now let's go and take a look at individual pairs. And the one I'm going to start with is going to be Euro USD. All right, we're on our first chart, which is Euro USD. For anyone new to our videos, we don't use complicated technical analysis, just simple support and resistance at big levels where we think big order flow is going to be around. We use volatility, we look at Bollinger Bands, and we use momentum as backup. That's it. We've already got a bias from the big fundamentals and sentiment before we do our technicals. And we are bearish of the euro. Although on my last trade, before the one I just put in, I got stopped out as we came above the 1 level. I didn't think we would break it. We got up to 101, okay? Now, in terms of that blue candle I'm highlighting, was into the ECB. Market looking for a really hawkish ECB. We just didn't think they could be as hawkish as the market expected. And they weren't. And the euro came down, and now we followed through to the downside. So I see the par level now as significant resistance, and then these bodies and tails over here. I don't think we'll get back to the double top. Okay, of course, anything can happen, but I think euro is a short with a stop behind the par level. And you see where mine is, 10050. Going to 96 and then 90. Okay, now if we look at the big picture in the euro, look at that for a downtrend. We haven't seen much blue. I think this blue candle here, this one will prove similar. The downtrend will continue. Now, I've spoken about how bad it is in Eurozone in numerous videos, but just want to show one chart in relation to this here. This is the Euro current account, okay? That's basically how much of a surplus Eurozone earns. Now, that is going down, okay? Now, why is it important? Because Euro USD will follow it. Current account really weighing on Eurozone because they're spending out so much money in terms of the energy crisis. Okay, this chart that's from Nordea says 95. We're saying 96, then 90. Now, in terms of Eurozone, the economy is in recession. ECB cannot tame inflation because it can't raise rates high enough without wrecking the economy. I've discussed this in previous videos. You can go and take a look at them, but bearish of the year, that bounce is a sell in our view. Obviously, yeah, anything can happen before the Fed. On Fed day, we will be probably, hopefully, taking in partial profits or partial trades. And yeah, this is as it is now. I don't see the one level getting taken out. Next pair we're going to look at is GBP USD. Right, GBP USD, quite a nice rally up here. Rally, really relief rally in terms of Liz Truss's tax cutting budget that sent the pound down here, was rolled back. Then you had Rishi Sunak become leader, who was the market's preferred choice. But yeah, we've rallied up quite nicely, but the situation in the UK is absolutely dire. Now, in terms of Bank of England, we have them coming on Thursday, and I think they can disappoint the markets with a smaller rate hike than the market is looking for, which will send the pound down. But I think you've got a triple top here at the 116 level. Always like coming off round numbers. And you've also got the outer Bollinger Band as well. Very often when you get nice move up, you hit a round number. Outer Bollinger is there. We can use that as resistance, an extra resistance line. Come down, I think that's a sell. The risk is not too much against the potential reward. I think we should get to here, maybe even a run on down to 108. So I see the pound as a sell. Where should we go next? I covered this one in a video yesterday, so it's only going to be very brief. This is AUD USD. Right, we're on AUD USD, and I did cover this in a video yesterday, so it's going to be very brief here. A big downtrend. We got most of that, got stopped out on this rally. Then we stall into the 65 round number. I just basically thought it was a sell off the level that stopped pretty tight behind this double trend line here and the outer Bollinger Band. But come down a bit, but not too much, okay? I just think it's a sell back to 65, or if we go through 64.80, clear of the round number, okay? Not much risk against potential reward. 60, then 55. Now, in terms of the USD, gave the view, obviously it's going up on a hawkish Fed, but it can go up on risk aversion as well. And what's going on in China could create big risk aversion. What's going on in China now anyway is going to hurt Chinese correlate or Chinese yuan correlated currencies like the AUD. But you go and check out the video for the full details. But AUD, just a bounce in a big bear market, corrected oversold going down. USD CAD. Terms of the USD, big correction. We get down and test the 135 level. These two bodies here, outer Bollinger Band. We bounce back within the outer Bollinger Band away from the 135 level. We're now above 136. So that is a buy in our view for a move to 140, then 145. So plenty of upside against risk. And now the Bank of Canada, their last meeting, hiked rates less than expected. I expect the Fed now to out-hike the Bank of Canada. You've got all commodity currencies are just so sensitive to the big global slow up in the global economy. Okay, it's a big, huge bearish fundamental. Dollar can gain on risk aversion as well. USD CAD dip for us is a buy. Right, next pair I want to go to is going to be USD SEK. Okay, now in terms of the Swedish krona, again the dollar had its correction to the outer Bollinger Band. Now we've come back up above what I consider now to be support. Get through this high here. We should be off the upside. The stop could be tight behind first level support. In fact, I think this one's moved since I did my chart earlier. Yeah, so we've moved through. So stop behind here. Okay, looking for chart highs. If we push on up, let's say through these bodies here, okay, you could tuck the stop behind the 11 level. Swedish krona for us, I won't go through the the bearish fundamentals for it here, but it is a weak European currency. Okay, now next pair I want to do USD CZK. This is another euro correlated currency. Forgot to mention I was talking about USD SEK. If the euro goes down hard, that will weigh on the correlated currencies. Now Czech krona, Eastern European currency, and yeah, I've got this feeling that the Russia-Ukraine crisis is going to get even worse, and it will weigh on the Eastern European currencies. They've already, had a lot of problems because they've lost trade with Ukraine and Russia, and also refugees as well. So yeah, looking for this one to make a move up to this monthly resistance level. Again, the correction comes outside the outer Bollinger Band, so we can come back within it, often do that. Now we've worked our way up. I think we've got support on the bodies here, support where we pushed off there. It's not too much risk against the reward. I think this one's moved since I did the charts. Let me just have a look. USD CZK. Yeah, so she's moving to the upside now. So the stop on new entries, that's the first level of support, just tight behind the 24.50 level. Okay, so I'll bring my stop up when I update this chart tomorrow morning. Next one, USD PLN and their Eastern European currencies. They're the same as USD CZK. They're going higher, but let me just find the next one. USD CNH. Right, USD CNH. We obviously looked at this yesterday. Anyone who came in on the trade, I've now changed my stop to 721. Okay, now in terms of this one, saying yesterday, I think this could trade as high as 10. It's a fantastic up move with this 20-day moving average or mid-Bollinger Band, just basically holding pullbacks. I think, a lot of upside, huge problems in China, weigh on the commodity currencies, and also could weigh on risk off and give the dollar an extra boost. So you can check out the video. I think I said that earlier. We also covered USD ZAR yesterday. Nice blue today. I said the stop is going to now be behind the tail of the day. So I'm going to go 1804. I think we should just follow through. You could wait for a break of 1850 and then put your stop somewhere behind the second level support. We don't know what that will be yet, but if we break 1850, 19, then up to 20. Good risk reward, fast moving pair. Where are we going next? So this one's another one from yesterday. USD SGD comes down outside of the outer Bollinger Band, double bottom, back within it, up. I've now changed the stop to 140.20. Now I think this has got great upside potential. 145 and then possibly a run on to 150. I mean, this is, for me, obviously the view has got to come correct, but it's the best risk reward pair of the USD pair. So that is quite a slow moving pair. Now, in terms of the pairs, they're the ones that we like. USD, we just think is going up generally. Big bull trend. Okay, over the last few weeks, couple of weeks or so, we haven't had much joy with our USD pairs, but we're starting to get joy now. And over the year, we've done extremely well from the USD. It is a big uptrend. You've got to expect retracements, but this retracement, against the market seeing a dovish Fed, they've already decided that. So let's see what happens. It could be just like the ECB. The market thought the ECB would be really hawkish, and they weren't. I just don't see the Fed being really, really dovish. And I think, if you're doing entries, go for aggressive entries and use round numbers, big levels of support resistance. Use the outer Bollinger Bands. They're very useful. So's the mid Bollinger Band, actually. I did do a video. I haven't really gone into too much entries in this video. I should have done more. Just look at a video I did about 2 weeks ago called A Simple Trading Strategy That Works, which goes in a little bit more to Bollinger Bands and using them with support and resistance. They're a fantastic indicator in our view. So, what else can I add on entries? Yeah, just try and look for what the market is anticipating, and then see if you can go against the view if you think the view is wrong. So yeah, try to think if there's anything else I can add. Now we'll see where we go, but USD is doing okay at the moment. We'll see if that continues. Big bull trends very often run far further than people expect, and I've seen forecasters throughout the year saying this dollar bull trend is over. It's been a great bull trend. It could run far further. The big fundamentals out and out bullish of the USD, in our view, of course. I hope you found the video useful. Thank you for watching.